Good morning, everybody. Hopefully you had a wonderful weekend. I have kind of a fun call for you guys today, and it's going to be super helpful for you and your clients, and some free software that you can find on the internet. So I'm glad that you're on. So a couple things first. 5Q tape breakdown last week was listening to a really good conversation an advisor was having. It's something we could all learn from. So take a listen to that if you haven't as of yet. So right now, with what's going on in the market, we need to go in with our eyes wide open. So let's talk about that a little bit. And this has to do with the software I'm going to show you. So according to Motley Fool, the stock market's telltale crash signal is back. The previous 4 times this has happened, the market has lost anywhere between 20 and 89%. So previous 4 times, that means what percentage of times this has happened do we see a downturn? What percentage of times? 100%, yeah. 100% of the time it's going to go down, but it could go down anywhere between 20% and almost 90%. The stock market is coming off nothing short of a historic year in no particular order. The Wall Street investors navigated their way through. The benchmark S&P 500 losing over 1/3 of its value in less than 5 weeks during the first quarter, then a record-breaking snapback rally from March 23 to the S&P 500 hitting an all-time high in under 5 months, and a brief but steep negative print of the West Texas Intermediate crude futures in April, and historic volatility that took the CBOE volatility index to its highest reading ever in March. So when looking back, there have only been 5 times in history when the S&P 500 has maintained a move above a PE of 30. In 1929, boom, went down 89%. 1997, 2000, after hitting all-time high of 44.2, nearly half the value, so lost half. So 89% down, 50% down. Third quarter of 2018, 20% down. Fourth quarter 2019, 34% down. 2020, to be determined. So what's happening right now with the market, guys? We've already talked about this. Where is institutional money right now? Where is institutional money? Sidelines. Very good. You guys are smart. And then what's the influence? Even though we talked about this about 3 weeks ago, affluent investors, so people with $1 million or more, they think we're in a bubble, but what are they doing with their money? Even though we're in a bubble, what are they doing with their money right now? Investing, that's right, Tom. And not holding, investing. That's what's crazy, Mark. Not holding, they're investing. And then what's happening with millennial investors in Robinhood? They're still in there thinking, what? This is a easy way to make tons of money. Yeah, they're day trading. So right now, the Shiller PE is 35. It's 35, which means we could an implied future return of 0.7. And the reason I bring this up is this: the 4% withdrawal rule. What does the 4% withdrawal rule depend on? Or what's the weakness of the 4% withdrawal rule? Timing of withdrawals, that's right. The sequence of return. And we've got in there, Mark Papa says, or Kevin says, interest rates? Absolutely, Kevin. So let's take a look, because here's the thing. A 4% withdrawal at the beginning of a bear market is going to do what to your clients' portfolios? A 4% withdrawal rate at the beginning of a bear market is going to crush it, right? On the other hand, a 4% withdrawal at the beginning of a bull market is what? Your client's going to be what? Yeah, just dandy. That's right, just dandy. So I found this calculator, which is, I think, awesome. So here's what the calculator is looking at. It's looking at the PE10. Okay, you guys, what's PE10? It's the CAPE, right? It's Shiller's PE. It's the PE on average over the last trailing 10 years. That's what the PE10 is. That's what this indicator is talking about. This is the PE10. So this calculator, and you see right here, passionsaving.com, retirementcalculator.html. It's a fantastic calculator. So what it's looking at is 4 scenarios. So it's saying, and right now, which of these four scenarios are we at? 1, 2, 3, or 4? PE 10, which one? 1, 2, 3, or 4? We're at number 4, that's right. The PE is 35. Now it's saying the TIPS total return is 1%. Actually, it's at 0.125%. So we're giving it 4 times, or what, 10 times almost, 10 times higher return than what it's getting right now. So that means we're giving the benefit of the doubt or not giving the benefit of the doubt to bonds? Giving, that's right, we're giving the benefit of the doubt. And then stock allocation, 80, 80, 80, 80. And then what's the chance of us ending 30 years at least with $1? That means at least with $1 in our account. So the 0% balance is saying we'd have 0% in our account. So we'd end up dead even. And what does it show us here? A safe withdrawal rate, if we're at the beginning of a bear market, right? I'm sorry, bull market, which would be the PE's at 10. The PE's at 10, we could pull out how much? How much could we pull out then? 9%. That's, that's if we could see in the future. Holy moly! What if we're at a moderate market? Well, then we could pull out 5. What if we're at a slightly overvalued, not terrible, but slightly overvalued? We could pull out what? 3.2. But if we're at a super high portfolio, then we would pull out what? 2.52. So this is, and then we've got reasonably safe, which means you've got a 90% chance of being okay. Or, I'm sorry, 95% chance of being okay. Likely success is an 80% chance. Then we got a likely failure and almost certain failure. So this is but how many of your clients want to die dead even? What are most of your clients trying to do? Die dead even, or at least keep what they have in there right now? They don't like their accounts to go below what they are right now. Yeah, keep their balance. So let's look at that. So this is if they end up with no more, no less. Obviously, they'll end up with less when you consider inflation. It means if they start out with 500,000, they'd end up with 500,000. What do we have going on here? Again, giving the benefit of the doubt to bonds. Scenario is 8. You'd have a 8% withdrawal rate, but look at where we are right now. You'd have how much of a withdrawal rate? How much of a withdrawal rate where we're at right now? Yeah, 1.38. So that even reasonably safe, we have less than 2%. Likely is 2.18%. Are we anywhere near 4% right now with where we are right now in the scheme of things? Not even close. So let's go to the calculator just a second here, and I want to show you some things if I can. Okay. So first of all, will any of you guys put money, save money in bonds right now? No, that's crazy. So we're going to get a bump right away. So the highest that this will allow us to go is 3. Now, are you guys okay telling your clients that they'll make 3% a year on average going forward in their FIA? Yeah, that's right. I'm absolutely okay with that. They should be making way more than that, but I'm absolutely okay with saying 3%. So when we put in 3%, we keep the 80, 80, 80, 80. Get back to up here. Okay. And then let's go to 100% because that's what most people want, right? And then let's calculate. So we're still at 1.22% here for where we are right now. But it's gone up or down by putting 3% in here? No, not compared to what it was before. It's gone up because it was 1.18. This is 1. So now, do we think that our clients should be in 80% stocks? No. So let's go 50-50 and see what happens. What happened to our withdrawal rate by going 50-50? Did it go up or go down safely? Oh, sorry, shouldn't be at 44. Thanks for pointing it out. Okay, so if we go 50-50, what happened to the withdrawal rate? Did it go up by a little bit or by a lot? Let's go up back here. We're at 80. Let's just look at scenario 4. That's where we're at right now. Calculate. 1.65. And when we go up to 50, goes up to 2.27. So are your clients being hurt or being helped by going from a 80-20, 80% stocks, 20% FIA, or to a 50-50? Are they being helped a little bit? Yeah, a lot. That's right. They're being helped a lot. A lot. And then let's compare this now. What if we go here to a where the bonds are right now? Again, 80% stocks, giving bonds the benefit of the doubt. Is that helping them or hurting them? I mean, you're giving them almost a full what above? Yeah, it's half. It's half. You're giving them a full, if they've got 500,000, you're giving them how much more income can they take? If they have an account of 500,000, how much more income can they safely take with a 50-50 in FIAs compared to 80-20 with stocks and bonds? 50 grand. That's right. Is that a little or is that a lot? Is that a little or a lot? It's a lot. So, again, this, if I can bring it up here, back to the, well, before I go on, any other scenarios you want me to show right now? But do you get the idea or the power of this chart, this calculator? Because would I do something differently if if the PE was at 14? If we go back to March, it had gone down to 14. Would I have done something differently with my clients in March? Nobody has an answer to that? They could pull out more money in March safely. Okay, so please, let me see if I can go back here. And I have to go to, why am I not going to get out of this? Okay, so it's www.passionssaving.com/retirement-calculator.html, and Missy will make sure that that's on the
Yep, I'll sure go ahead and post that with the call as well.
Yeah. My calculation was a little bit off there on the 50,000. It's 5,000. 1% more on 500,000 would be 5,000. Sorry about that. So yeah, 50,000. That'd be awesome, wouldn't it? So 5,000. But still, 5,000 is how much per month for them, with doing no extra work. Yeah, $350, $400. Make sense? So we'll make sure that this is on the website, but this is something that you can feel more comfortable when you recommend. But recommending a 4% or a 4% withdrawal rate right now is a ticket to what for your clients? Recommending a 3% withdrawal rate right now, is a ticket to what for your clients? Danger, danger, danger. Make sense? Know your value proposition, and this is so important right now. You better understand why that your client should work with you. Why? Why should you understand why your client should work with you? What's happening? What major shift is happening in the investment marketplace and has been for the last 10 years? What major shift has been happening? Robo, yeah, that's absolutely right. Nick, what else? What else has been happening? Sure, online. And what are most people doing online? Where's the money moving, guys? With do-it-yourself, where's the money moving? With do-it-yourselfers. Yeah, Robinhood is still kind of small, and it's still just the millennials. Big money people. Who has the most money, millennials or boomers? Boomers by how much? By oodles, and are boomers using Robinhood? No. Here's what I'm talking about. The share of passively managed funds in the U.S. equities. What's happening to the money? Is it going to actively manage, or is it going to ETFs? Going to indexes? Do they need us for indexes, guys? No, we're an unnecessary expense. So here, this is where equity passive, equity active. And is there enough proof for them online to show that passive investing is way more profitable than active investing? How often does active investing beat the marketplace? Often or not very often? Yes. So about 25%, between 16 and 25% every year beat the market. Problem is that 16 or 25% that beat the market this year, where are they next year? Yeah, they're below. They're at the bottom. Because in order to beat the market, do you have to take more or less risk in the market? More or less risk. If to beat the market, you have to take more or less risk. You have to take more risk. Unless you've got an algorithm that nobody's ever been able to invent that can beat the market. Does anybody out there have a way to beat the market because they got some sort of super duper computer program that can do that? If they did, how long would it be before everybody would have that program in today's world? Within a couple of weeks. Because what does every company do? Is there one company that has an advantage over another company? Or are they all spending, hundreds of millions of dollars in research trying to do this every year? Yeah. So the reason I'm pointing this out is you better be able to have a value that's not just about investing. Because if you're just about investing, what's eventually going to happen to your clientele? Because the younger the clientele, your 80-year-olds will stay with you, but now your 70-year-olds, what are they starting to do? Your 60-year-olds, what are they starting to do? Your growth is going to do what? Because the younger they are, they're more likely to use indexing versus active management. So you need to understand your value proposition. Who's your target market? What's the compelling emotional pains? What is your tangible desirable benefits? What is your competitive differentiation? So let's talk about this. Who's our target market, guys? Who's our target market? Yeah, 60 to 75, 60 to 75. What's the compelling emotional pain that we have them experience? Not protect them from losses. Come on, guys. Okay, Nick's got it. Steve's got it. Mark, what do you mean by that? Mark, Papa, what do you mean by that? It's not running out of money. Yeah, Bob's got it. So only about a quarter of you guys got it. Guys, I preach this over and over and over. When we're doing a tape review, what did we want the client to say? What did we want the client to say at the end of titling? What do we want the client to say at the end of every single script? That's right. The advantage is that, because guys, let's go back to some of the other answers I got. It's that my advisor's screwing me. If they think, oh my gosh, I'm going to run out of money, I need protection from that. Who else can do that? Who else is telling them they're going to take care of that for them? Their current advisor. Oh, what if it's I want to make sure I have financial independence. Who else is telling them that they'll be able to help them with that? The current guy. There's only one emotional pain. There's only one emotional pain that the current advisor cannot help them with, and what is that? It's the only emotional pain that their current advisor cannot help them with. If they believe he's screwing them. If they believe he's screwing them, is he going to be able to help them with that? Can they go back to him to get help with that? Everybody answer that with the whys or ends. Yeah, no, they're not going to be able to help them with that. So what's our tangible, desirable benefits then? Get them away from that emotionally damaging situation of their guy taking advantage of them. So what's your competitive differentiation from every single advisor out there, guys? That's kind of a hard question. The 21-point checklist, yep. But can we communicate that, guys? Can we communicate that to them? Because you're right. In reality, it is the 21-point checklist. It is the fact that we have them understand that their guy is taking advantage of them, putting more money and making decisions for them that put the advisor in a better position and the client in a less position or a worse position. But when we're communicating, Mark's got it, our elevator pitch. That's our competitive differentiation. You need to have, because in true reality, it's a 20-point checklist. But in order to communicate that, we need something that can, if we say, hey, we've got a great checklist, is that going to work for differentiation in marketing? Got a great checklist, got great software. What does everybody say? Does their guy say that? Yeah. Because they don't know what the 20-point checklist does. So they're just thinking, well, it's the same software my guy uses, or probably similar. So instead, we use our elevator pitch, which is what? I help people born before 1955, or whatever year you want to use, depending on who you're targeting, 1955. Help my clients born before 1955 here in Olmsted County to get benefits they weren't aware of. I'll give you a couple examples of that. One is a program that will replace your spouse's Social Security when they die. Because when your Social Security when your spouse dies, you lose their Social Security. Your income go down by a third to one half of what it is right now from Social Security. So there's a program that we help people with that replaces that, and the program that will give you 2 years or more of long-term care costs with no expensive annual premiums. So how many of your competition are saying those two things? Is that easy for a client to say, wow, I've never heard of that before. How does that work? See, that's what you want. I never heard about that before. How does that work? So that's our competitive differentiation. Now, does that have anything to do with market? Does that have anything to do with I got great investment prowess? Because if you say you have great investment prowess, what did we just learn? Is that a good unique proposition or a bad unique proposition? Not good. Make sense? Cool. So now let's get a little bit sharper in our skills. 15 communication skills that are crucial to sales success. So hone your sales communication skills to be a better salesperson, coworker, or employee. Now again, I'm the pot calling the kettle black on these. I'm just as bad as anybody else on these. So as I'm pointing the finger at you, I'm pointing the finger at me as well, because we all have to be aware of these things and get better every single day. It's not that we can't do them, it's that we forget to do them, or if they're not on the top of our minds, we're going to forget to do them. First is give your undivided attention, which means when you're talking to somebody, where should your phone be? Where should your email be? Where should your eyes be? On them, that's right. Phone off, email off, eyes looking them in the eye. And it's hard because Missy will attest to this. If my conversation is longer than a minute, guess what I'm doing? On the phone, if my conversation is longer than a minute, guess what I'm doing? Looking out the window, checking email, and I'm half in, half out. I get distracted, that's right. So to be a great communicator, you need to give undivided attention. Get rid of all your distractions. Number 2, be an active listener. What is an active listener? Well, we just talked about number 1 is be attentive. Ask open-ended questions. Ask probing questions. Request clarification if you don't understand what they're saying. We don't like to paraphrase. Instead of paraphrasing, what do? Instead of paraphrasing, what do? Very good, Dale. We parrot, and we ape. That's right, we ape. Be attuned to reflect feelings. Really pay attention to what you think they're saying, and then summarize. Again, that's part of aping. Pay attention to body language. Yes, you need to pay attention to their body language. Who else's body language do you need to be paying attention to besides theirs? Yours. I have a clock behind their head. Why do I have a clock behind where the person's sitting? Why do I have a clock behind where they're sitting? To keep on track, but that's not why I have it behind them. Yes, you never want to look at your watch, Kevin. You never want to look at your watch. What does that tell them? That you're totally focused on them, or you're worried about the time? So little things like that can have, guys, when you look at your watch, when somebody is talking to you, looks at their watch, what immediately happens in your brain? What immediately happens in your brain? That's good, Mark. You don't wear one? That's awesome. So what immediately happens in your brain when somebody looks, yeah, they're not interested in me. I'm not important. They got other things to do. So pay attention to yours as well as their body language. Also, pay attention to your tone of voice. What's the only way you're going to know what your tone of voice is, guys? What's the only way you're going to know what your tone of voice is? Record. Because remember, there's the old saying, and there's different percentages, but what's generally thrown around is communication is 70% nonverbal, 30% verbal. So nonverbal tone is considered nonverbal. Because here's the thing. Listen, I'm going to say the same thing. Come here. Come here. Come here. Come here. Same 2 words. How different was the communication there? Same or way different? Very different. Same 2 words, just 2 words, very different. You have to understand your tone of voice. When I feel a meeting is going off the tracks, what happens to my tone of voice? When I feel the meeting is going off tracks, what happens to my tone of voice? If I feel they're starting to, that's right, I slow down and I talk quieter. Because can anybody argue with me when I'm talking like this and talking slowly? How hard would it be for you to argue with me if you were getting angry at me and I was talking like this? What's the first thing they teach people to de-escalate? What's the first, not everybody will know this, so I'm sure some of you have gone through de-escalation training. Not a lot of you, but a few of you. What's the first thing they tell you when de-escalation? Take a breath, that's right. Slow down, lower your voice. So tone of voice is so important, and the only way you're going to know how you're doing on that is to record yourself. Be empathetic. Empathy is seeing with your the eyes of another, listening with the ears of another, feeling with the heart of another. Put yourself in their shoes. When I'm talking to somebody, I'm constantly thinking, when I'm saying something, I'm pretending that I'm receiving that message as well as giving it. So that if I say something that I think is, oh my gosh, they could interpret that wrong, I can immediately fix it, because that happens all the time. Have to be empathetic. Understand what is not being said. A good example of this is if they answer yes, do I have any clue what they're saying when they say yes? No, I don't have any clue. When they say yes, they could mean 4 different things. So I never want to be asking a question where they give me a close-ended question, because I don't know what's being said or not being said. Articulate. Yeah. Be specific. Should we ever talk in vagueness? We should never say it. We should never say they. We should never say things that aren't specific. So it should be taxes. If I'm talking about taxes, then say taxes. Don't say it. If I'm saying they, and I'm talking about their bank, then say their bank. Don't talk. Why don't you want to talk with theys and its and thems and those? Why don't I want to talk that way? If I do, then it's possible for what? Clarity is the key. That's right. If I talk with vague terms like that, they may misinterpret what I'm saying. Is it a stressful situation for them to be in there with you? Even if you're a nice guy, we heard Bob last week is chatty, he's fun, he's having a good time, he's laughing. Even so, even in that great situation, is it stressful for them to be in there? Yes, because they're in your office, they're in your territory, and it's the unknown. They don't know what's going to happen. Yes, and we're talking about their livelihood. There's all sorts of reasons why they're stressed. So there's no way you can take away all the stress. We do all that we can to minimize that, but there's always going to be stress. And if there's stress, are we hearing and interpreting things as well as we might normally interpret them if we're calm? We're not. So that's why it's even more important to be specific when you're communicating. Make sense? Also, should you be average at the information that you're covering, skilled specialist, or an expert at what the information you're covering? Got to be an expert. Got to be an expert, because if you're an expert, you're going to communicate that much what? Better. And the better you communicate, the more they can understand. What you don't know, a body of all possible knowledge. Here's the things you realize you don't know, things you realize you know, things you don't realize you don't even know. So the portion of information out there is what? Stuff we know or don't know? Stuff we don't know. So never assume that you understand anything unless you are an expert in that. Even then, experts realize what? What do experts realize? They realize that there's stuff out there that they don't know. Be curious, be curious, be curious. You want to know what's going on in their mind. You want to know if they understand. Be curious. Know when to doubt and when to give the benefit of the doubt. So here's what they're talking about here. When somebody comes into my seminar, do I think of them as a tire kicker or a plate licker? Do I think when they come to my seminar, do I think of them as a tire kicker or a plate licker? I guess there's 2 answers to that. One is no, I don't, because I have no judgment against them. Or 2, yeah, I know they're all plate lickers and tire kickers, and I have no judgment either. Do I? If I think they're tire kickers, plate lickers, do I get mad at them for that, or do I think, yeah, if I was in this situation, I'd be a tire kicker and a plate licker too? So is there any animus? Do I hold any animus against them when they come to a seminar? So Jeff, can you hop in here a second?
Yep, I'm here.
How many times have you talked to an advisor? I know I've talked to advisors all the time. When they're talking about a seminar and they're angry at the attendees in the last 20 years.
Yeah, I've heard that a lot.
And what are they angry about?
Oh, they feel like they're just there to take advantage of them for the free food, or you know, just kicking tires and plate lickers and tire kickers.
Because they expect people to show up and want all the information and want to move and want to work together, right? That's what these advisors who get angry think, right?
Right.
Would anybody in their right mind come to a seminar like that?
No, I don't
With that
think so,
mindset? No. Or if there are, it's 10%. 10%. So guys, here's the thing. If you're angry and don't like the people coming to see you, what have you just guaranteed? If you're angry and don't like the people coming to see you at a webinar or in your office or whatever, what have you just guaranteed? If you don't like them, guess what? That's right, it comes through. If you don't like them, guess what? They're not going to like you. So don't give everybody the benefit of the doubt. Have a positive intent. Think of people, because here's the thing. At a seminar, do we have things that people want at a seminar? Do we have things people want at a seminar or a webinar or when we're one-on-one in front of them? Do we have things they want? Yes. So if we have things that they want, and the only thing between them and what they want is us, are they the problem? If we have things that they want, and we better, and the only thing between them and that thing that they want is us, we're the problem then. Does that make sense? We better become better communicators. If you want to be trusted, be honest. And the honesty also comes in, because you guys, I've worked with you guys for a long time. You're all honest. But sometimes what we do, though, is we overpromise and underdeliver versus underdeliver and overpromise. And when you overpromise and underdeliver, is that a form of dishonesty that can get us into trouble? Yeah. So I know you guys are honest. You're not taking advantage of people. We don't have people on the system. If we catch you doing that, you're gonzo. But we sometimes do overpromise and underdeliver because we think, I got to overpromise. I got to keep them on the hook. I got to make sure that they stay with me. So I better, I'll deal with it afterwards if they don't get it. Or else we look through life with Pollyannish glasses that things are all going to work out. Do I ever assume everything's all going to work out, me personally? No, I do not. So I always make sure that I cover all the problems with them and say, we may never see these problems, but let's look at these. If these problems happen, I'll be dealing with it, but don't worry about it. But I want to be upfront with people. Never assume anything. Do I ever assume? Okay, let's say that I was referred a client from one of my best clients refers me their brother with $500,000. Do I assume that brother is going to work with me? No. So what do I do with that brother? Start pitching product or take them through the process? Yep, 21 point. I take them right through the full process. Never assume anything. Do I ever assume anybody doesn't like their advisor when I take them through 21? Nope. The only way I understand they don't like their advisor is if what happens? If they say it, they have to say it over and over and over. There's a difference between persistent prospecting and pestering. So let's say that we screwed up for some reason. We didn't get them to say that their guy was taking advantage of them and they don't trust their guy or whatever. For whatever reason, they don't move forward. How do I get them? Do I keep calling them and keep calling them and keep calling them and keep going, hey, we're in the process. Hey, we got to get this done. Hey, come on in, take the paperwork. Is that being persistent or is that being pestering? That's pestering. So yes, we put them on the drip, and when I do call them, I always have a value-added thing. So if they, for some reason, ghost me, I'm going to call them and say, hey, seems like you want to keep your money at the same, not doing anything with your money right now. Yeah, I get it. Things are crazy out there. Totally makes sense for you to sit on the money. But let's come in and at least get that power of attorney fixed so that Social Security won't be a problem for you in the future. So let's at least get that done, and then God bless you, you can go on your way, because I get it. Right now is not the time to move the money. So how many times did I tell them that it wasn't about the money? A few times, or one or two times, or more than a few? More than a few. I'm saying, hey, Because the reason they don't want to come and see me is why? Because they don't want those other things taken care of, or they don't want to move the money. It's because they don't want to move the money. So I'm going to tell them, don't move the money. Let's just get this one of these other things taken care of. So was that then, was that pestering or was that persistence at that point? Persistence. I'm saying, let's get this other thing done. I'm adding value, not saying, come on in, I got to get your money. Come on in, I got to get your money. No, I'm adding value to them. Make sense? Silence is also part of the conversation. This is the other reason that taping or recording yourself makes sense, because guess how comfortable salespeople we are with silence? We're not. We're not. And we have to be able to allow them to think through what we're asking them. When we ask a hard question, we need to be able to make the silence sit there and make them stew on it. Because you can base it, 5 seconds of silence to us feels like what? Feels like 30 seconds. So you gotta be able to sit there in silence when you ask hard questions and let them through it. Now, when you ask a hard question, it seems like they're struggling because they don't know. You got to jump in and go for and help them out. But if you are asking a question where they've got to just say out loud that their guy is screwing them, are you going to rescue them from that? No. Because if you jump in and rescue them from that, what have you just told them? Oh, great. And on hard questions, if I just be quiet, he'll come in and save me. So I don't actually have to answer any of those hard questions. So there's a difference between asking a hard question where they have to emotionally come to grips with their guys taking advantage of them, or asking a hard question where they don't know what the heck you're talking about. And most of you guys are astute enough that when you're looking at somebody, can most of you, when you look at a client, see that they don't get what you're saying sometimes in their face? Yeah, usually. So when you see that, then you want to go in and do what? Answer the question for them, or you're going to fall on the sword, say, I think I asked a question that was kind of convoluted there. How would you possibly be able to answer that? I apologize for that. I think that I got that all kind of mixed up when I asked that. Here, let me go back and clarify. So then whose fault is it that they don't understand? It's my fault. And then they're right, Nick. Ask simpler questions then. And what's the simplest open-ended question we can ask somebody? What's the simplest open-ended question we can ask somebody? Because who, what, where, why, when, how, those are great open-ended questions. Those are the best questions. But if they don't have enough information or understanding to be able to answer who, what, where, why, when, how, we ask a simpler question. The simpler open-ended question is an either or. So would that mean the market would go up or the market would go down? Does that mean it'd be harder or it'd be easier? Does that mean they're okay with holding the money or they want to give you the money? Is that still an open-ended question? Can they answer those questions with yes or no's? No, they cannot. So it's an open-ended question. And is that easier, though, for them to understand or answer when I say that? I want to give them an either or. Now, do I want all my questions to be either or? No, that's the weak. That's the fallback. That's the weakest kind of open-ended question. But if they're confused, I'm going to fall back onto that to help it make it easier for them to understand. Does that make sense? So these are all things that you know. These are all things that you know. But what happens with these skills? If we don't constantly go back and review them, atrophy. That's a great word. They atrophy. So just a quick thing to end the call here. To be successful, you have to have a sense of purpose. If you're just in this to make money, what's the likelihood you're going to be successful? If you're just in your job to make money, what's the likelihood you're going to be successful? High or low? Not high. Have a sense of purpose. Why do you do what you do? Embrace the batting average. That means, are you always going to have the best meeting with somebody? No. You're shooting for what? Increasing your batting average one meeting at a time, getting improvement. Embrace the effort. If something's easy for people, do you get as much enjoyment out of a hard skill in mastering it, or something that was easy in mastering it? Where do you get the better better feeling? Yeah, the harder something is to do, the better you feel once you master it. So don't look for easy things, look for hard things. And pursue satisfaction. What do I mean by pursue satisfaction? At the end of the day, you need to go home feeling what? Like nothing was accomplished. So no, you got to go home feeling that you're getting better. Something happened that was worthwhile. So what's the best way to come home every workday and feel satisfied that you've gotten a little bit better at what you do? Something was accomplished today. What's the best way to do that? Oh, you guys are so smart. 15-minute drill. That's right, the 15-minute drill. So I don't care if the rest of the day you spend on the gerbil wheel and nothing gets done, at least at the end of the day you can say, you know what? I did get better at one particular skill. And if you got better at one particular thing every single day, guess what's going to happen? Wonderful, amazing things. And be spiritual. You got to, whatever that, however you couch your spiritualism, whether it's with a God or it's with an energy or whatever it may be, you have to have that in your life. Because if you don't have some anchor that you think drives your life, you're going to be a ship without a port. You got to have some level of that there's something bigger than you in the world. Because when you have that, these things will check so much easier. Make sense? So you guys have a wonderful week, and we will talk to you all next Monday. Thanks, everybody. Have a great day and great week.